Comparing Betterment annualized return versus alternatives is a crucial step in making informed investment decisions. To start, it is essential to understand what annualized return means. Annualized return refers to the rate of return of an investment over a given period, scaled to a one-year period. This metric allows investors to compare the performance of different investments with varying time frames. The first step in comparing Betterment annualized return versus alternatives is to determine the time frame for comparison. This could be 1 year, 5 years, or even 10 years. Once the time frame is established, the next step is to gather the annualized return data for Betterment and the alternative investments. This data can typically be found on the investment company's website or through financial news outlets. When comparing the annualized returns, it is crucial to consider the risk associated with each investment. Investments with higher returns often come with higher risk, while those with lower returns tend to be less risky. For example, stocks tend to have higher returns than bonds, but they are also more volatile. Betterment, being a robo-advisor, offers a diversified portfolio that can help mitigate risk. Another essential factor to consider is the fees associated with each investment. Betterment charges a management fee ranging from 0.25 to 0.40%, depending on the type of account. Alternative investments, such as Vanguard or Fidelity, may have similar or lower fees. It is vital to factor these fees into the comparison, as they can eat into the returns over time. To make a practical comparison, let's consider an example. Suppose we want to compare the annualized return of Betterment's moderate risk portfolio to that of Vanguard's 500 index fund. Over the past 5 years, Betterment's moderate risk portfolio has returned around 7% annually, while Vanguard's 500 index fund has returned around 8%. However, when factoring in the fees, the net return for Betterment's portfolio would be around 6.6%, assuming a 0.25% management fee. In contrast, Vanguard's 500 index fund has an expense ratio of 0.04%, resulting in a net return of around 7.96%. In conclusion, comparing Betterment annualized return versus alternatives requires careful consideration of the time frame, risk, and fees associated with each investment. By following these steps and considering these factors, investors can make informed decisions that align with their financial goals and risk tolerance. It is essential to remember that past performance is not a guarantee of future results, and it is crucial to continually monitor and adjust the investment portfolio as needed.